people. Hope you're all doing well. Welcome back to our morning update. It is, what day is it today? It's Wednesday, I believe, right? Wednesday, February 28th. Generally the last day of February, but this year we have a leap year. So tomorrow's going to be the last day of February, and then Friday we start off with March. Interesting stuff. There's a few things to mention here before we take a look at the overall markets and how they size up with the expectation of what kind of movement that we might get today. Right, yesterday we were looking for some of that downside to kind of phase in, and that's what we saw generally. So today, what I want to talk about is the potential for strikes again. Apple, that caused a cute little move to the upside yesterday into the close, and then some face-ripping stocks, right? Some of the most shorted, or one of the most shorted stocks gets this very, very surprising rally. Morning, Laurent. Hope you're doing well. So industrial action is returning to the fore after some crazy strikes that we saw in 2023 that threatened to upend large swaths of the economy. Amongst those that were involved, remember the Pilot Association that hit major airlines like American, AAL, Southwest, LUV, and Teamsters Union at UPS, Workers United at Starbucks, and International Association of Mechanists and Aerospace Workers at Spirit AeroSystems. So we can't forget that the damaging walkouts that plagued Hollywood, with both writers and actors conducting historic double strikes, as well as the massive unrest of the auto workers. If you remember the auto workers, those long prolonged strikes that plagued last year that saw staff at Ford, General Motors, and Stellantis join the picket lines. So things are getting kind of hoppy at Anheuser-Busch, right, InBev, or Bud, with more than a quarter of its U.S. workforce, or 5,000 employees, threatening to walk off the job at 12 breweries across the country. Right, without contract by February 29th, tomorrow, there won't be any beer come March. No more beer. No, this is worse than what we've seen so far. So this is what the Teamster Union warned, which is fighting for substantial wage increases, job security, and other benefits. It was only a week ago that 400 Teamster members went on strike at Molson Coors Brewery in Fort Worth in Texas, meaning workers could soon walk at two of the nation's largest beer makers. So AB InBev is being extra mindful due to long recovery that followed the Dylan Mulvaney controversy that sparked last April, where sales went down due to that. And the marketing campaign that involved the influencer, so got a lot of backlash. So we'll see how that kind of shapes up. But realistically, conditions are ripe for discontent, as wages in many industries have not kept up with the pace of inflation, rising costs of living, as we've seen with massive strikes in 2023. At the same time, record sales and profits have been seen at the biggest of brewers. That prompted both AB and Coors to announce billion-dollar stock buybacks to please Wall Street, though the announcements have only made more employees feel left out of their fair share. Forcing companies to the bargaining table last year also resulted in strong deals with better working teams, terms, and conditions, especially when backed by the U.S. administration that calls itself the most pro-union in American history. Now, speaking of changes, right, and movement in most recent activity, right? Let's move on to what we've got cooking here. Apple hits the news yesterday. And what we got with Apple was very surprising. It's reportedly canceled work on its electric vehicle initiative, Project Titan, and shifted some of the employees to work on generative artificial intelligence. It comes amid rising costs and competition that has worried many automakers, right? And Apple has spent billions of dollars on Project Titan so far, something that CEO Tim Cook called the mother of all AI projects. The iCar was initially rumored to be fully autonomous, but eventually downshifted dramatically to a level 2+ from level 4. So this could be a massive setback in a very highly saturated market already, and Apple getting into the AI game as of late. Massive company, but this is something that generally should have been picked up a long time ago to experience AI gains like we've seen in NVIDIA, in Google, right, in other things, in Amazon, so on and so, in Microsoft. So Apple has been kind of falling back in terms of the Magnificent Seven, right? I'm not including Tesla here because Tesla has significant pullbacks, but Apple has been lagging as the second largest company in the world, in the US, right? American company based on market cap. And yesterday, with some of that news going into AI from that EV space, we saw a little pop, and they're desperately trying to hold that 180 area. Now, something else in terms of stocks that looks pretty interesting here is Beyond Meat. Wow, Beyond Meat, massive, massive ripper. You can see we closed yesterday at about 750. We're pre-market about 1240, somewhere along the lines of a 70% pre-market gain, right, on after the earnings, right? Better than expected Q4 results as strong international sales more than made up for weak U.S. demand. CEO Ethan Brown noted that in 2024, the firm plans to steeply reduce operating costs and cash use while employing pricing actions and the right sizing of its production footprint to support margin expansion. The plan also includes a core platform renovation and Beyond IV, and certain non-cash charges related to the inventory of assets that are no longer consistent with the path of profitability. While Beyond traded in double digits for the first time this year, the short interest of the stock was about 40%, which is likely to contribute to this massive swing that we recently saw. So when it comes down to the markets that we're interested in, or that we're most interested in here, the S&P 500 futures, yesterday what we had was a decent little move to the downside in the beginning of the session as we held these high 80s and continued lower. We came down into our beloved 50-68 area before we got this massive 20-plus point rally into the end of the session, trading into that low 90. That low 90, surprise, surprise, massive distribution ledge and an area where a lot of sellers overtook the buyers in most recent sessions, is now pulling prices down on the overnight session, making a temporary new low. Right now, we're hovering back above that 68 area. 68.70 is going to want to hold as an immediate support structure. But as long as we hold under the massive longs that got stuck around that 80 and high 70 from yesterday, I think that we could explore a little more of that downside. Keep in mind that the PCE report comes out tomorrow pre-market. I had it mistaken. I thought it was going to come out today pre-market, but it comes out tomorrow pre-market. So that's something that a lot of people are going to have eyes on, and that's going to shape up the market. I think the PCE comes out a little hotter than expected. We get a dump and then a rebid to close out the week on a higher note. So as I'm looking at this, I'm still neutral / bearish on this, but the bearishness really accelerates if we can get under that 68, right? That 68 trade, 66, and we can actually flush under it. That's where these things hold out. No offers and sellers under 68, right? We don't necessarily have a choice. We're probably going to stay balanced as the first 2 days of the week so far have been fairly slow. So with that being said, let's open up our live trading room with our traders here. We welcome you guys in there on Friday. It's going to be open for everyone to join in. But today, check out TradeProAcademy.com. Check out community.tradeproacademy.com for access to our open Discord. So thank you all. Let's do this again tomorrow. Wrap up the week on a strong note. And I'll see you guys live on Friday. And tomorrow as well. So thank you and take care. Let's open this up.